Question 296. By executing a power of attorney document, a party conveys legal authority to a representative designated to make property, financial and other legal decisions on the party's behalf. The party's representative is called a quasi-attorney, b. special agent, c. fiduciary, d. attorney in fact. Correct answer is D. Attorney in fact. The power of attorney will terminate upon the incapacity of the party making the assignment, unless it contains a durability clause. An attorney in fact, also known as an agent, is someone who is legally authorized to act on behalf of another person in real estate transactions. The person who appoints the attorney in fact is called the principal. The attorney in fact doesn't need to be a lawyer, and can perform a wide range of personal and financial functions. Question 297. Every month for the last 5 years, a broker collects the rent for apartment units on behalf of the building's owner. On January 31st, the owner suddenly dies. The next day, when the agent makes his regular trip to collect the monthly rents, one of the apartment tenants refuses to pay the broker on the grounds that the owner's death had automatically revoked the existing agency between the owner and the broker. Is the tenant legally justified in withholding rent? A. Yes, the tenant is correct. B. No, the broker has the right to continue collecting the rent as long as he deposits the funds in an escrow account administered by the owner's heirs. C. No, the broker has the right to collect the rent until the owner's will is made public. D. A judge will need to decide the issue. Correct answer is A. Yes, the tenant is correct. In agency law, the death of the principal, the property owner in this case, automatically terminates the agency relationship by operation of law. This occurs immediately upon the owner's death, regardless of whether the agent or third parties, like the tenants, are aware of it. Once the principal dies, the broker no longer has the legal authority to act on their behalf, including collecting rent. The tenant's obligation to pay rent still exists, but it is now owed to the deceased owner's estate, their heirs or the executor of their will. Paying the former agent after the principal's death would not necessarily discharge the tenant's rental obligation to the rightful recipients of the funds. Therefore, the tenant is legally justified in refusing to pay the broker because the broker's agency was automatically terminated by the owner's death. Question 298. A broker can pay a portion of his commission to the buyer, if the broker A. informs the real estate commissioner, B. informs the seller, C. does not pay the seller more than half his total commission, D. it is illegal for the agent to pay any portion of his commission to the buyer. Correct answer is B. informs the seller. While there might be specific regulations depending on the jurisdiction, in most cases, a broker can share a portion of their commission with the buyer as long as they inform the seller and obtain the seller's consent. Transparency is crucial. The seller has the right to know how much commission is being paid and how it's being divided. The seller needs to agree to the commission split with the buyer. Question 299. A legal document that requires a borrower to pay a particular interest rate during a certain period of time is called a trust deed, B. bond, C. note, D. certificate of deposit. Correct answer is C. note. A trust deed is used instead of a mortgage to secure a loan on real property. It involves a third party, trustee, holding the title until the loan is repaid. A bond is a debt security issued by governments or corporations, promising to repay a principal amount plus interest over a specific time. Certificate of deposit, CD, is a bank account that offers a fixed interest rate for a specific term. A note, short for promissory note, is a legal document that outlines the terms of a loan, including the principal amount, interest rate, repayment schedule, and borrower's obligations. Question 300. All of the following statements about an attorney in fact are true, except A. One who is legally authorized to act on someone else's behalf. B. A fiduciary. C. They must be an actual attorney. D. An agent. Correct answer is C. They must be an actual attorney. An attorney in fact is simply someone who has been granted the legal authority to act on behalf of another person, the principal, through a power of attorney. The person appointed as attorney in fact does not need to be a licensed attorney. Any competent adult can be appointed as an attorney in fact, as long as they are not disqualified by the power of attorney document or state law. They can be a family member, friend, business associate, or anyone the principal trusts to handle their affairs. In order to be designated as someone's attorney in fact, the principal must sign a power of attorney form. Other true statements. A. One who is legally authorized to act on someone else's behalf. This is the core definition of an attorney in fact. B. A fiduciary. An attorney in fact acts in a fiduciary capacity, meaning they have a legal and ethical obligation to act in the principal's best interests, with loyalty, honesty, and good faith. D. An agent. An attorney in fact is a type of agent, acting under the authority granted by the principal. Therefore, the key distinction is that the term, attorney in fact, refers to the authority granted, not necessarily to the profession of the person holding that authority. Question 301. All of the following are required to be in writing, except A. Real estate sales contract. B. Listing agreement. C. Agency agreement. D. 6-month lease. Correct answer is D. 6-month lease. In California, and most other states, the statute of frauds requires certain types of contracts to be in writing to be enforceable. These typically include A. Real estate sales contract. Agreements for the sale of real property must be in writing. B. Listing agreement. Agreements authorizing a real estate broker to sell property must be in writing, as per the statute of frauds and real estate licensing laws. C. Agency agreement. In real estate, while not always strictly required by the statute of frauds in all contexts, agency agreements in real estate, especially those authorizing the agent to enter into contracts on behalf of the principal, like listing agreements, are generally required to be in writing for enforceability and under real estate licensing regulations. In California, a lease agreement for a term longer than 1 year must be in writing to be enforceable under the statute of frauds. A 6-month lease has a term of 1 year or less and therefore does not fall under the requirement of the statute of frauds to be in writing. While it's always best practice to have any lease agreement in writing to avoid misunderstandings, a verbal 6-month lease is generally considered legally binding in California. Therefore, a 6-month lease is the exception among the options provided, as it is not legally required to be in writing to be enforceable. Question 302. A homeowner renovates his home, doing all the work himself, but fails to pay the provider of his new sinks and piping. This plumbing supplier can file against the owner. A. Writ of attachment. B. General lien. C. Straight note. D. Mechanic's lien. Correct answer is D. Mechanic's lien. A writ of attachment is a court order to seize a debtor's assets before a judgment is issued. It's a more extreme measure typically used in lawsuits. A general lien would encumber all of the homeowner's property, not just the specific property improved with the unpaid materials. A straight note is a promissory note, a written promise to repay a debt. While the supplier might have a note from the homeowner, filing a lien is a way to secure payment by attaching a legal claim to the property itself. Under the law, a mechanic is anyone who provides labor, services, or supplies to improve real property, like carpenters, electricians, roofers, and plumbers. A lien is a legal claim against real property. A mechanic's lien, then, is a legal hold against your property. It is recorded in the county recorder's office by individuals or entities who are owed money for their contributions to improving your property. Question 303. The body of laws created in 1952 by a national commission and the American Law Institute to help regularize the law of sales across the nation is called the A. Library of Sales Codes, B. Uniform Commercial Code, UCC, C. National Sales Standardization Protocol, D. None of the above. Correct answer is B. Uniform Commercial Code, UCC. Library of Sales Codes isn't the name of a specific legal code. National Sales Standardization Protocol. This sounds similar but isn't the official term by the National Commission and the American Law Institute. The UCC plays a crucial role in governing commercial transactions by providing a consistent legal framework across different states. It covers various aspects of commercial activities, including sale of goods, leases, secured transactions, using property as collateral for loans, negotiable instruments, checks, promissory notes, letter of credit. While each state can adopt its own version of the UCC, there's a high degree of consistency across these versions, promoting predictability and efficiency in interstate commerce. Question 304. Which of the following is not true about amortization? A. Over a period of time, the interest portion decreases as the loan balance decreases. B. Over a period of time, the interest portion increases as the loan balance decreases. C. Over a period of time, the amount applied to the principal increases. D. None of the above. Correct answer is B. Over a period of time, the interest portion increases as the loan balance decreases. Amortization is the process of gradually paying off a loan over time through regular installments. Each payment typically covers both a portion of the principal, the original loan amount, and the accrued interest. In the early stages of an amortized loan with fixed payments, a larger percentage of each payment is allocated towards covering the interest charges, while a smaller amount reduces the principal balance. As the loan term progresses and the outstanding principal decreases, the amount of interest calculated for each subsequent payment also diminishes. This is because interest is typically calculated based on the current outstanding loan balance. Consequently, with each fixed payment, a larger proportion is directed towards paying down the principal, leading to a faster reduction of the overall debt. This systematic allocation ensures that the loan is fully repaid by the end of the agreed-upon term. Question 305. California homestead law provides for the following forms of homestead exemption protecting against certain judgment creditors' attempts to force the sale of the home. A. Residential homestead exemption. B. Automatic homestead exemption. C. Declared homestead exemption. D. All of the above. Correct answer is D. All of the above. California's homestead law offers protection to homeowners against certain judgment creditors who might try to force the sale of their primary residence to satisfy debts. This protection comes in two main forms. The first is the automatic homestead exemption, also known as the dwelling or residential homestead exemption. This protection is inherent and arises automatically when a creditor attempts to force the sale of a homeowner's primary dwelling. Homeowners don't need to take any specific action to benefit from this initial level of protection. It's automatically applied to the equity they have accumulated in their home. The second form of protection is the declared homestead exemption. This involves a more formal process where homeowners actively record a homestead declaration with the county recorder's office. While the automatic exemption offers a foundational safeguard, a declared homestead provides additional advantages. These benefits include continued protection of equity if the homeowner sells their current residence and reinvests the proceeds in a new home within a specified period. Furthermore, the formal declaration can create a clear public record of the homestead claim, potentially making it more challenging for creditors to initiate a forced sale of the property. In summary, California homestead law provides a dual-layered approach to protecting a homeowner's primary residence from certain creditors. The automatic exemption offers an initial, inherent safeguard, while the declared homestead provides a more formal and potentially more robust layer of protection with added benefits for homeowners. Both mechanisms aim to preserve a certain amount of equity in the home, allowing individuals and families to maintain their housing stability.